Is it just me or trading just doesn't work? Well, it is just you. Because in this video, I'm going to show you just one trading strategy that will literally reshape your mind and change the way you look at trading. The mastery of one single trading strategy and one currency pair or instrument can literally set you up for good. It can literally help you quit your 9-to-5 job. And I'm not even joking. What's up, everybody? My name is Gislen and this is Pips and Gold. I rebranded my name for the OGs once again. I said it in my last video. I changed my name because I've been away from YouTube for a while, for almost a year. But I'm back this time, and I'm back as a new person. I'm back as a new name, a new brand, and I'm trading only gold. That's why the name is Pips and Gold. It's self-explanatory, isn't it? So let's talk about psychology real quick. Trading psychology is one of the factors that a lot of traders struggle with. That's one of the factors that a lot of new traders struggle with. There's something called revenge trading, and revenge trading is actually almost inevitable as a trader. There's going to be times where, let's say, you deposit $1,000 into your account, and then every trade you take back to back just keeps hitting your stop loss. Like, you just keep losing trades back to back. These days will definitely come, but as a trader, you need to be mentally prepared for it. I'm not perfect, but what I'm saying is, you have to learn to leave your chart. You have to learn to walk away from the chart. You can take 3-4 trades in a row, and then instantly that instinct is just going to come like, my $1,000 is gone. It's only 100 that's left. It's only $200 that's left. I'm going full port. I'm going to risk everything on this trade and milk the most that I can. And if it does not work out, I blow the account. I don't care. Everybody does it. Everybody does it, but it's not the right mindset to have. I've bounced back from trades that I never thought I would ever. Accounts that I almost blew, I bounced back from it and actually made withdrawals from it. And I'm pretty sure that is because when you get to that point where you don't really put your interest on trading, just on monetary, gains, you do it you do it because you see it as something that you're going to be living off of. You trade because trading is the only thing that you can do and that you love doing. It's the only thing that brings you true satisfaction, true joy. That's me. I left trading 4 years ago. I started trading, by the way. Let me take you guys back. 4 years ago, I started trading. I was still in school. My teacher is in class. They're teaching. I'm behind. I took the bench right behind the class. I was a backbencher. That's how we call it here in Cameroon. I was a backbencher. And I had this phone, this tiny iPhone 7. It's actually here. The phone is still here in this house. A tiny iPhone 7. I was going on my chart and I was using expert options. Some of you guys, you know expert options. I started expert options, I left expert options, and then I started trading synthetic indices with Derif. I traded that for a while, boom and crash index, all of those things, nothing worked out. I watched a ton of videos. There are trading channels that I know them by name that helped me out. For example, you have the trading channel, you have there's this Indonesian guy, I've forgotten his name. This Indonesian guy, I watched that guy's videos back to back. But none of these things, some of these things were just like the basics, you understand? These are like basics, trading, teaching you pips, teaching you leverages, brokers, all of these things, spreads. Those are the basics. They're important, but it's not going to make you professional. It's not going to make you profitable as well. So the reason I'm making this video is that if you are started or you are at a point in your trading journey that you feel like maybe quitting, you feel like nothing is working out, you've watched a ton of videos, you try them the first day, it works out, the next day it doesn't, or it works on demo, when you fund it, it does not work. This strategy that I will reveal to you in this video, I'm not going to take too long to explain it there. The strategy is very straightforward and very simple, and I don't charge for it. It's completely free. If you can trade it, okay. If you cannot, well, I'm sorry. So basically what I'm looking for in the market here, I'm looking for levels where price is condensed. I'll take you guys to my chart, so don't worry. I'm looking for levels where price is condensed, like we have a lot of weak rejections. We also have a lot of candles saturated. You understand? When we have that saturation of price, I call it condensed. I call it condensed pricing, area of condensed pricing. That's what the strategy I trade is called, and it was discovered by me. I call it the ACP strategy, area of condensed pricing. So where there's condensed pricing, that's where I'm interested. That's where I want to trade. That's my point of interest. I don't know if that makes sense. So let's say there's you know what, enough of the talking. I'll take you guys to my computer. If you're not subscribed, kindly subscribe, because this video, nobody's going to be as transparent and as open as me. So subscribe to my channel. Let's grow together. I'm documenting my trades here. I'm documenting my trading journey here. Grow with me. Let's work together. Let's grow. You don't have to pay me for nothing. There's a link down below to join my free Telegram. My Telegram, I post setups, I post updates, videos and stuff, explaining stuff to people who ask me questions. So feel free to ask me anything in the comments. I'll be reading your comments and I'll be replying to each and every one of your comments. Let's jump right in. Okay, so this is my charts right here. This is gold on the 30 minutes. So we're going to be trading gold on the 30 minutes. So what I'm looking for is pretty simple. This is basically I'll say support and resistance, advanced support and resistance. That's what I'll call it, at least, because it's not just highlighting any levels where price bounces off of, but it's highlighting the most important levels where price has actually condensed at. Like when you look at these marketplaces, I call them, you can say a marketplace, because there is a lot of saturation of buying and selling going on in that particular area at that particular point in time. So let me show you guys. You see my screen, right? What I look for when I open my charts is I look for areas like this where price. So what I do is when I see wicks like this, there are two things. It is either the market structure is bearish or is bullish. So if the market structure is like this, and then we have our wicks, and then the market breaks structure to the upside. So in this scenario here, if this price broke structure to the upside, I'll be looking for it to come back, and then I'll be buying from this lows here. I'll be buying from this other block here. You can call it an order block, you can call it a demand level, you can call it a support, anything you want to call it. That is your problem. All right. So I'll be buying here, and then in a selling scenario, it's the same thing. I'll just be looking for it to break structure to the downside, and then I'll sell. For the new traders who do not quite understand what I mean by structure and all of this extra stuff, structure is basically the market, you know, the direction of the market. That's the trend. Let me put it like that. So how do you know the trend? Is by reading the structure. The market structure will tell you the market trend. Does that make sense? Like if the structure is bullish in the sense that if the market keeps breaking the previous highs and then creating new lows, creating new highs, this market structure is bullish. And in a bullish market structure, we buy. Buyers are bullish, sellers are bearish. Bearish is when the market now is selling. It's the opposite of this. So the opposite of this is when the market is making lower lows, lower highs. So instead of making higher highs, it's making lower highs, lower lows. That means every time the market moves, it breaks a new low. It breaks the old low, forms a new low, and then breaks the previous low. That's just how it works. In a market, in an uptrend market, it breaks the highs and it continues breaking the highs to the upside. So at any given point, you have to also understand that this thing could change. Like the trend could change. Like the market could literally switch. It could start selling instead of buying. It could start buying instead of selling. So it's not like it's confirmed, but you have to go with the trend, because majority of traders trade with the trend. So majority of the volume, the market volume, is on is following the market trends. There's big banks, there's institution hedge funds, all of these huge firms that are trading billions of dollars. They are the ones moving these markets basically. So you want to go with that wave. You don't want to trade against them, because you cannot. You don't have enough capital to do that. All right. So in this case here, we have what? We have a downtrend. This is the market structure. We have a low, we have a high, we have this tiny low here, we have a lower high, and then we have a lower low, lower high. Now, this is a downtrend, right? So if we see this weeks, like I said, highlight the weeks, and then you wait for a retest on that week, you trade it. If you want a more detailed video, that means a more detailed explanation of this particular trading model, I'm going to link the video right here. You're going to click and watch that video. All right, I'll put the video in the description as well. You can watch it, or you go to my page, the last video I did, you watch that video. It is going to explain everything. This video was not really meant for this, but I'm just like, okay, I just want to slide it in, I want to chip it in so that you guys can at least just understand what I was trying to say. So this is basically it. It's trading weeks, right? This is another level here, weeks, break of structure, weeks, you trade it, you sell it. This is another one here. Once the market breaks, you get me? You can focus on trading break and retest, right? You wait for the market to break these weeks and then you buy it. Basically, that's how it works. You wait for the market to break it, you buy it. This is another example here. This is another one here. You can see the wicks. See what happened when price got there. It's sold. So do your due diligence to follow this strategy exactly as it's been taught. This video is not to teach you this particular strategy. It's just to tell you that, hey, it's possible to trade gold and this is how you can do it. So go to my other video and watch it. I don't want to make this video too long. Click that link, watch that video. That video is 22 minutes long and it's only talking about this forex strategy, this particular strategy. I've used it to pass funding challenges, and I'm going to be starting my new funding challenge with forex from Funded Next, a $100,000 challenge. I'm going to document everything I post on this channel. So if you want to be part of that, be sure to subscribe. Use the link in my description to join my free Telegram. I post setups and I post everything there. And I'll see you guys in the next one. Hopefully this video was basically just to tell you guys that, hey, don't give up, keep going. If you think things are not making sense now, keep going, consistency, and things will make sense as you go, as you gain more experience and everything. See you guys.